Orient Overseas Container Line Limited, OOCL, is a company listed on the Hong Kong Stock Exchange. Its main business is container transportation and logistics services, with the stock ticker symbol 316. OOCL's parent company is Orient Overseas International Limited, OOL, a company headquartered in Hong Kong. The core business of OOL is its wholly owned subsidiary Orient Overseas Container Line Limited, OOCL. OOCL is one of the world's largest international container transportation, logistics, and terminal companies. As one of the most well-known global brands in Hong Kong, OOCL provides fully integrated logistics and containerized transportation services, with its network covering Asia, Europe, North America, and Australia. The main business areas of OOL include container transportation and logistics services. Through OOCL, OOL provides comprehensive, reliable, and efficient international container transportation and logistics services, covering various supply chain processes. Port and terminal investments. OOL also invests and operates container terminals worldwide through another subsidiary, OOCL Logistics Limited. In addition, OOL's business also involves real estate and securities investments. In 2018, both OOCL and OOL were acquired by China Ocean Shipping, COSCO, and it is because of this acquisition that the company is worth retail investment. I will talk about this in detail later. Orient Overseas International Limited, OOL, is a comprehensive business company listed on the Hong Kong Stock Exchange. It was founded by the late shipping king Tung Chao-yung, and the Tung family controlled the company until 2018, when it was acquired by COSCO and became a subsidiary of the company. The company is registered in Bermuda. In 1947, Tung Chao-yung, the founder of Orient Overseas, established the first fleet entirely staffed by Chinese and later named the fleet Orient Overseas Line. In 1969, it was renamed Orient Overseas Container Line. In 1973, Orient Overseas established a new holding company, Orient Overseas Container Holdings Limited, which was listed on the Hong Kong, Far East, and Gold and Silver exchanges. The company later changed its name to Orient Overseas Holdings Limited, with the Chinese name of Orient Overseas Industries and the abbreviation of Orient Overseas. Orient Overseas has close ties with the government of the Republic of China, as evidenced by their emblem adorned with the national flower of the Republic of China, the plum blossom. Thanks to this special relationship, Orient Overseas was able to develop vigorously in East Asia. At its peak in 1985, Orient Overseas had a fleet of over 150 cargo ships with a carrying capacity of over 10 million tons, surpassing Boon Ha, and it was one of the world's 7 largest shipping companies. Tung Chao-yung passed away in 1982, and Orient Overseas was handed over to Tung Chi-hua for management. By 1984, Orient Overseas liabilities had exceeded 9 billion Hong Kong dollars. Just paying loan interest to creditors cost 561 million Hong Kong dollars, 3.3 times the annual net profit. In 1985, the deficit approached 2.5 billion Hong Kong dollars, and Orient Overseas was on the brink of bankruptcy. In 1986, Stanley Ho injected capital to help Orient Overseas overcome the crisis. In 1986, Orient Overseas International registered in Bermuda. Initially, Orient Overseas International and Orient Overseas Industries coexisted in balance, but in 1992, Orient Overseas International took over as the listed company. After the 1990s, the term Orient Overseas mainly refers to Orient Overseas International and its subsidiaries, such as Orient Overseas Container Shipping. On November 21, 2006, Orient Overseas reached an agreement with the Ontario Teachers' Pension Plan to sell its terminal division for about $2.4 billion. The division owns 4 terminals, including Deltaport and Vanterm in the Port of Vancouver and the New York Container Terminal and Global Container Terminal in the Port of New York and New Jersey, which are part of the non-container transportation business. On January 18, 2010, Orient Overseas reached an agreement with Capitaland of Singapore to sell Orient Overseas Development, China's current 7 real estate projects in the mainland for about $2.4 billion. Involving a floor area of about 1.45 million square meters. The 7 projects are located in Shanghai, Kunshan, and Tianjin, half of which are residential properties and the rest are offices, shops, and hotels. The net book value of Orient Overseas Development is about $1.115 billion, or 8.696 billion Hong Kong dollars. Therefore, Orient Overseas expects that the sale of Orient Overseas Development can bring in $1.055 billion, or 8.23 billion Hong Kong dollars in revenue. On April 4, 2012, Orient Overseas signed a new lease to lease Middle Harbor of Long Beach for a 40-year lease agreement worth $4.6 billion, which will be the largest port transaction in U.S. history. In July 2017, COSCO Shipping Holdings and Shanghai International Port Group proposed a conditional acquisition to the shareholders of Orient Overseas International Ltd, OOCL, with an offer price of 78.67 Hong Kong dollars per share. This represented a 31% premium over the closing price on July 7. If the proposal was accepted for all shares, the total cost would amount to about 492 billion Hong Kong dollars. The acquirers expressed their intention to maintain OOCL's listing on the Hong Kong Stock Exchange after the successful acquisition. At that time, the Tung Chihua and Tung Chichen family owned about 68.7% of OOCL's shares, of which COSCO Shipping was to acquire 58.8%, and Shanghai International Port Group would acquire the remaining 9.9%. The Tung family had committed to selling their shares, involving 338 billion Hong Kong dollars. In July 2018, the acquisition was completed. On April 30, 2019, OOCL sold its ownership of the container terminal at Long Beach Port in California, USA to Macquarie Infrastructure Partners for a price of $1.78 billion, equivalent to approximately 139.73 billion Hong Kong dollars. OOCL was to gain a pre-tax profit of $1.293 billion, equivalent to about 101.5 billion Hong Kong dollars, from the sale, and would retain control over the container facility's shipping and railway traffic for the next 20 years. Let's first take a look at the dividends of Orient Overseas International Ltd, OOCL, over the years. The dividend in 2019 was 15 Hong Kong dollars. The dividend in 2020 was 11 Hong Kong dollars. The dividend in 2021 was 60 Hong Kong dollars. The dividend in 2022 was 82 Hong Kong dollars. The dividend in 2023 was 35 Hong Kong dollars. If we add up the dividends over the last 5 years, the total dividend is 203 Hong Kong dollars. The current stock price of OOCL is approximately 115 Hong Kong dollars, which means the dividends over the last 5 years far exceed the stock price. As long as you hold the stock patiently for a few years, the return from OOCL is very good. This level of return has reached an astonishing degree. Why is there such a good dividend? In fact, it's because after COSCO Shipping acquired OOCL, the parent company wanted to take away the profits of the subsidiary. The simplest way to do this is through dividends. Major shareholders take the lion's share, and retail investors get a slice of the pie. Please note that such a dividend situation is rare, determined by the company's shareholding structure. Just for this dividend, one should hold COSCO Shipping in the long term. Let's now take a look at the financial report of Orient Overseas Limited, OOCL. OOCL's market value is approximately 76 billion Hong Kong dollars. The cash in OOCL's bank account is about 73 billion Hong Kong dollars, with a debt of 16 billion Hong Kong dollars. This debt ratio is very good. Next, let's look at OOCL's sales performance. We can see that in the recent 7 half-year financial reports, the sales revenue has grown from over 20 billion Hong Kong dollars to 86 billion Hong Kong dollars, with the most recent sales being 68 billion Hong Kong dollars. OOCL's sales are steadily growing. Now let's look at OOCL's cash flow. In the recent 7 half-year financial reports, the company's cash flow has increased from 2.8 billion Hong Kong dollars to over 40 billion Hong Kong dollars. The cash flows in the most recent 3 financial reports were 46 billion, 49 billion, and 40 billion Hong Kong dollars respectively. Finally, looking at the balance sheet, OOCL's assets amount to 150 billion Hong Kong dollars, with long-term debt at 50 billion Hong Kong dollars. This debt ratio is not high. Of course, it would be better if there were no debts. This requires OOCL to have a continuous and stable cash flow, which would allow it to repay the bank debt quickly. This would improve OOCL's financial condition. Let's now take a look at the stock price of Orient Overseas Limited, OOCL. Here is the weekly chart of OOCL. We can see that OOCL's stock price was at a low point before the end of 2020, around 30 plus Hong Kong dollars. Afterward, the shipping industry experienced a bull market, so OOCL's stock price rose all the way, and between June and August 2022, it reached a new high of 280 Hong Kong dollars. After August 2022, OOCL's stock price has been falling from the high point of 280 Hong Kong dollars, falling to just under 100 Hong Kong dollars recently, with a slight rebound recently, and the current stock price is about 115 Hong Kong dollars. Looking at the order flow, it roughly fell to the bottom of the order flow and then rebounded. Let me briefly explain what order flow means. It refers to everyone using the money and chips they have to vote on the price of this stock. The dense trading area is the widely recognized reasonable price in the current period. When the price is higher than this widely recognized reasonable price, the trading volume will decrease. That's because most buyers will think that the current price is higher than the reasonable price and are unwilling to buy. And when the price is lower than this widely recognized reasonable price, the trading volume will also decrease. That's because most sellers think the current price is low and are unwilling to sell. So, the order flow is a democratic vote conducted by all traders, a democratic vote conducted with their funds and chips. So, the more the price deviates from the current reasonable price, the smaller the trading volume. We can see that OOCL's order flow roughly conforms to the definition of order flow. The most dense trading area is around 134 Hong Kong dollars. When the stock price is higher than 134 Hong Kong dollars, the trading volume gradually decreases, and when it reaches 170 Hong Kong dollars, there is almost no buying. When the stock price is lower than 134 Hong Kong dollars, the trading volume also gradually decreases. When the stock price is lower than 100 Hong Kong dollars, there is almost no selling. So, from the perspective of the weekly order flow, 134 Hong Kong dollars is a reasonable price in the recent period. Now let's look at OOCL's daily chart. The order flow shows that after OOCL's dividend ex-rights on May 23, 2023, the stock price fell from 152 Hong Kong dollars to oscillate in the range of over 90 to 115 Hong Kong dollars. The daily line shows that the widely recognized reasonable price after this year's dividend is 103 Hong Kong dollars. Overall, OOCL is a company worth investing in. I hope everyone is satisfied with my introduction.